Good. Okay, everybody. Well, welcome to this webinar on the 7th of August 2017. And today we're going to discuss some strength information, more specific, the histogram. I understand that that some of you are having maybe a tough time using the histogram or really seeing its value. So I just wanted to reiterate some of the key points behind it, just to maybe help you see its value. That said, you don't have to use the histogram, but it's just a decent tool for some reasons that we're going to have a look at here in just a moment. Let me have a quick look here. Okay, got a couple versions of the histogram. This is the one that you guys have. I'm updating the software all the time. That's super good. Okay. Okay, so let these last guys in. Okay, so the histogram is nothing more than an indicator that's showing us the difference between the two currencies that are on the chart. So we have, as a matter of fact, just to illustrate this, I'm going to add another version of an indicator. This one here, just so you can see what it's used for or how the values are calculated. So that's 20, this is 20, okay, good. So what the indicator is doing, it's showing us the difference between the currencies of the two currencies that you can see on a given chart. And so you can see that at this point here, the Canadian dollar crossed the Swiss franc, and so we started to get some positive readings here on the histogram. They're not entirely the same because you can see they don't match entirely, but they're pretty close. And so if we're looking at this information, we're going to see, yes, we can see indeed that the Canadian dollar is stronger than the Swiss franc. So we want to be buying strength and selling weakness. But I thought that the colors and the two lines moving was a little bit maybe overwhelming for some, and so I want to simplify it as much as possible. So what I've done is I've made this indicator, and this indicator is just showing us the difference. And so very simply put, when the histogram is above the zero line, you should be buying. When it's below, you should be selling. But of course, you should be paying attention to what's going on the larger time frames as well. And so I'll just remove this one here because we don't need this one. This is the one that's interesting for us. So let's put a pair on there. If we have a look, this is the Australian dollar, American dollar, and one of the really good ways to use the indicator is to see if an area of supply and demand is going to hold. So as an example, let's just do like an analysis. So we'll say that our long-term trend is a 4-hour chart, and the intermediate term is the 1 hour, and the entry time frame is a 15-minute chart. So we'll just do analysis top-down, and then we'll see how this information can be good for us. So what we do is you go to the 4-hour chart, we have to identify these areas of supply and demand that are interesting to us. And so if we go here, and we enable the indicator, you see that we have a couple of, oops, not doing exactly what I want. There we are. You can see it's found some levels for us that are interesting. We have this one down here, we have this one here, and we have a couple just below here. This one's not fresh, it's been tested once before. These two are not very interesting because there's no real imbalance in supply and demand here. We have this one here and this one here. So we're just going to draw these ones off here. We're just going to mark this one off like that. I'll take the other one here, which is actually two levels. If we zoom in a little bit, you can see that we have actually a micro continuation pattern where price rallied, accumulated, rallied, accumulated, and rallied. So we have actually two levels in here. We're just going to box them both off so that we have them like that. Then we have this one here, which is tested once, twice, and price is slowly eating through it. And then we have this one up here, which is nice. And we have another one just above, which is also nice. Okay, so now we're going to disable the lines on the indicator, so we do this stuff manually. And so what we're doing now is that as we want to ideally trade in line with the trend. So we're on the 4-hour chart. If we look at this, if you zoom out, we want to get about 200 candles on the chart just so we can gauge the trend. If we go back, yeah, there's plenty you can see here. We're in an uptrend, so we want to be buying. That said, you can see that we've reached a bit of a top, and so now we're pulling back. So we actually have a 4-hour downtrend here. Keep in mind the longer-term trend is up, so we want to be buying at demand. But for the time being, until we reach opposing areas of demand, which we have down here and down here, we can sell. There's no demand in here. The first level of demand is down here, and we probably get to see a little support once we come down here to the 78.40-ish area. And so what we do then is we go to our intermediate time frame, and then we'll look for areas of supply that we've identified. We have one here, so we can refine our entry a little bit more. So we have this one here. We refine our entry, so instead of being like this, we can refine it and we can bring it up a little bit, just to the bodies. You know, we're going to take this one here, like so. Then you ask yourself the question: is this a parent or is this a child? This is actually a child. The parent is here, so this is actually a reaction to the parent, which we have just here. So that's the real supply, and this is a reaction to the supply here, and a pretty whopping one at that. So this is the 79.80-ish area. So what we do now is, we know we want to trade, we want to be selling here, and we want to be buying down here. And so now we have to, all we have to do now is actually sit on our hands and wait. And so we know we want to be selling, we know where we want to be buying, and so now you wait for price to reach the areas that are interesting. We don't try and force these the trades, we just wait for price to reach the areas that are interesting to us. And so ideally what you do is you wait for price to come up to this area of supply. This is the second time back, so it's less probability. Ideally you only want to take the first one. And so we're going to focus on this one here as an example. So you can see the price rallied, accumulated for 2 periods. We sold off, continuation pattern, sold off once again. So we had a really nice release to the downside here. So we knew that we wanted to sell here. So price started wriggling up, and you can see that price, I mean, it took 1, 2, 3, 4, 5, 6, 7, maybe 7 bars, 7 to 8 bars for price to move from the low of this supply down to here. So it moved about 65 pips in 7 bars. If you consider how many bars it took for price to give back that move lower, it took a lot more bars. If we just kind of have a look at that, it took about maybe 28 to 30 bars. So you can see that there is strength to the downside, and there's weakness to the upside. So price is having a tougher time moving higher than it is moving lower. And so what we do is we focus on this. So assuming that we are looking to sell here, we want to see signs that price is going to give way here. So what we do now is we go to a time frame 4 times smaller than the one that we're currently looking at, which is a 15-minute chart, which is this one here. And so what we do then is we wait for price to come to our level. So we have our area marked off, and you watch price wriggle up here. And if you're waiting for confirmation, well, then you don't put your limit order in. If you're just looking to sell, then you simply put your limit order to sell here at the low of the box, the 79-ish area. But assuming now that you want to wait for confirmation, then you would wait for price begin to wriggle up here. and then you would start to look for signs in the currency strength histogram that are showing us that this level is actually going to start to attract some selling. You can see that, I mean, we reached a peak roughly here, which was at this this period of accumulation. So price rallied, we accumulated for 2 periods, and then we sold off. So after this peak here, you can see that, I mean, what happened to the histogram? What happened to the Australian dollar relative to the American dollar? Well, it started to weaken. We don't know if it's the if it's the Australian dollar that got weaker or the American dollar that got stronger. All we know is that they are starting to converge again. They're starting to draw nearer. Once we reach the 0 line here, then they are have equal strength, and then it can go either way. But you can see once we reach this top here, the strength starts to fall off here. And now the indicator is set to the value of 20. You can set this to another value like this, for example, and you'll get like a similar result, but the larger the number, the slower the response. So you can see here that the response came a little bit slower here, a little bit later here, in comparison to the default configuration we had just a second ago. So I'll put that back on there. So move it back here. Oops. So we got the, oh, sorry, we have it just here, and then price started to move off here. And the beauty about this this tool is that it enables us to look for example, divergence. And so here you can see that. Let's just make sure that I don't have the trend line set. Let's turn that off. As you can see here that we had price moving higher, and we had the strength moving in the opposite direction. This tells us one very important thing. This tells us that price moving higher like this is not buying. It is price seeking liquidity to drive price lower. So this is very interesting to us, because when you can see that the price is moving higher, but the strength of the two currencies in relation to one another is not supporting this move, it means that the market is, or rather the broker that we're using, is looking to fill orders that they know are located up and around this area. So by the time you see this, there's a very good indication that price is probably going to drift lower. So, I mean, you don't have to guess here. You don't have to guess and say, okay, well, I'm going to sell now on this second accumulation candle. You wait. You simply wait for price to show you what it's going to do. And you can see that pretty clearly now. Once price reaches to the edge of this rectangle here, the supply, the 4-hour supply, then it drops off. And then look what the strength did. It completely flattened out. And that tells us it can go either way. Knowing that it can go either way, there's a couple of guys here is going to let in. Knowing that it can go either way, knowing the fact also that we just poked into major supply, the likelihood of price going lower is much higher than it going higher. And so what you would typically do is you would wait for price to move away like this, and then you would sell at the accumulation just prior, located close to the lower high in strength, like so, which would be this here. This would be your entry just here. So you just simply draw this in here. We would take that from the high to, for example, the low of the candle, because it's like a pretty thin one. Let's refresh that, and this would be your entry here, and then price drifted lower from there. And so, I mean, that's one of the ways that you can use it. So you can see that we can use it to verify, to seek confirmation that a given area of supply or demand is going to hold, which we can do using a divergence that we just discussed now, which is a pretty interesting way to use this information. Typically, you'll see people using MACD and other stuff. I've got one here. I'll just throw it on there just so we can compare the two. And the information will be pretty similar. So here we're seeing 12.26, perfect. So here you're seeing something pretty similar, I suppose, how you have kind of a peak here, and maybe this is a little bit lower here, or at least equal, and then price starts to slowly drift off. You can see that price started to drift below just here, so the MACD crossed a signal line, and so this is a bearish signal here once this happens. I don't use MACD at all, but for those of you that do, this is pretty much showing us the same kind of information. The interesting part about using this is it's showing us strength across all of these pairs here. So it's looking at the Australian dollar in relation to the euro, the pound, the American dollar, the Japanese yen, the Swiss franc, the British pound, the Kiwi, yeah, and the Canadian dollar. I already said that. And so it's giving us actually an index. So instead of only having a dollar index, we have an Australian dollar index, American dollar index, a pound index, a euro index, a Swiss franc index, and so on and so forth. And so the information that you're seeing here is actually really profound, which is why it's so powerful and so interesting. And so I mean, this is probably one of the main ways that I use it. I simply use it to verify if a given level is going to hold or not. Okay, Eric is asking here, my histogram shows a higher second peak vs a divergence. What are your settings? Well, my settings are the standard ones. The look back is 20. It could also be the price feed. I'm using IC Markets in Australia, and so the price feeds are going to be different, which will result in different readings here. But typically, it'll be similar. That makes sense. Yes, of course, my pleasure. So price moved away nicely. I mean, that's one way of doing it or using it. Another way is to use it to find the trend. You can look at price to find the trend, or you can. In fact, I'm just going to throw on a new version of the histogram. Where are you? The new ones are pretty similar. I've added like the ability to use an average to kind of smoothen this out of it, so you get like less chatter. I found it to be pretty useful when it's on the higher value, so like on a 34. I mean, these could be set to anything. I like Fibonacci numbers, so I use 13, 21, 34, 55, so on and so forth. And so they're pretty useful. But you can see it's pretty much the same. We're getting the same reading. It's just smoothing it out a little bit. But this one here, I like to use for, I'll put on the longer one here as I had. So that's the wrong one, isn't it? Let's go back. There it is. We go to 34. This will look nice and smooth now. Yeah, much better. So you can see here, another way to use it is to use it to gauge the trend. So we're going to make this even more profound by putting it on, let's say 50, 55. So now it's showing us a lot more information. You can see here that, I mean, we had a keen interest on buying the Australian dollar in relation to the American dollar here. And then around here, just around here, price started to move in the opposite direction. And so you can see once price started to move below here, then we wanted to be selling fresh areas of qualified supply to sell. So here would be buying demand from here to here, and here we would be selling at supply. But another good thing about this is that you can go on to the time frame or to greater. So you can go up here and you can see, okay, what's going on in the 4-hour or the daily, what's going on in the daily chart, and you can see here that the price has reached a very high level, historically a very high level, and now we're actually starting to move off that high, which you can see very clearly here in price. So you can do that also on the 4-hour chart and get a same reading. You can just see that we've reached a high reading, and price is starting to draw in towards the zero line. So you take this information with you to, for example, the 1 hour or the half an hour, whatever time frame is that you're using to trade on the smaller time frame, your entry time frame, and then use this to sell at supply or demand, whatever direction you should be trading it. And now we know that based on the information that we could see on the daily and the 4-hour, that we want to be selling or buying the very, very deep pullbacks into these areas as we discussed earlier. So you look on the 4-hour chart, you can see that yes, we are indeed moving lower. So you go to the small time frames and you look for those areas of supply to sell at, which we have this one here and we have this one here which has been tested. And we have this one down here, which is of course kind of the opposite end of the chart where we should consider to or look for price to start to bounce from there. And so you can also use it like that. I normally pay more attention to price than I do anything else. I know that that Mike has a setup that he uses where he uses the histogram and market flow to help him decide kind of the shorter term entries. I think it's on the 1-hour chart. I'm not exactly sure which time frame is he uses, but you have the same thing going on here where you, instead of using the MACD, you would use this, and you could see that yes, we have market flow is down. We have a high, low, lower high, lower low. The histogram is on the downside, so we want to be selling. So you would sell at supply here. So this would have a selling at perhaps this or maybe something up in here. As soon as price moves above this high here, well, that invalidates that specific setup that I know he's quite partial to. Hey Eric, do you know if he's still trading that pattern, or if any of you know if he's still trading that? I know he was very good at it. Letting a couple more guys in the room. Perfect. Yes, I mentioned it lately. Okay. Okay, but it's just, I mean, you can use it in any other way that you would use an oscillator. So if you want to put, for example, like RSI or something else on there, you can kind of use it in a similar way. I mean, this is showing you trend here, but it's not showing you overbought, because overbought or oversold is a bit of a dangerous game, because you're trying to pick tops and bottoms based on a secondary representation of price, which I think is quite difficult. So I recommend using it for divergence, like we discussed earlier, and also just kind of gauging what's going on with the trend. You can see here that, and this is actually a really beautiful transition between these different market types. We have the really kind of relatively smooth kind of push higher. If you're on the 1-hour chart, you could be down the 5-minute chart and just buying pullbacks for this entire period here. Then we have this big cut. You would lose the last trade there, or maybe the last couple of trades, and then it would go down. Then you would start selling. You would do the exact same, apply the exact same strategy. And we see here we had a really nice, actually a very beautiful transition from a bearish market to a bullish market here. And then you would, I mean, when price started to, rather the histogram started to move up, well, that would be a warning sign that that the bearish momentum is slowing down a little bit. And once it crosses over here, well, then we have confirmation that we should be on the long side of the market, and then start to buy. So, but that's pretty much the same way that that I've been looking at it. Another way that you could gauge market direction is looking at kind of the major and the intermediate swing points, where you have, for example, if you have, I mean, this is a swing low here. If you have, let's find a good one. When you have, for example, you have a swing point like this, we have a high, then you have the next candle. If this candle is able to close lower than the two previous candles, so then we have a change in the market direction here. It doesn't mean that we should be selling. It just means that this is kind of a major turning point for the time being. At the point that we have price move below this swing low here, then we have a downward trend on that particular time frame. And ultimately, this histogram is showing you kind of the same thing without having to go in and look and analyze these candles one by one or in groups of 2 or 3. So it's just a pretty handy tool. How many here have been using the histogram maybe you just got it. Okay, as a guide, says Sandy. Have the people that have been using it, have you found it? Oh, you just got it. So maybe most people here have just been introduced to it. Sandy, you've been using it as a guide. Have you found it to be interesting, or is the information too late or irrelevant to what you're looking for? Or does it kind of give you maybe a little bit more confidence? Okay, super. He's saying it's interesting as an indicator, definitely. Okay, super. Good. Good. Well, it's pretty similar to what we can see here in the dashboard, which gives us a really good overview over an awful lot of information, but it's just focusing on the one time frame. And so here you can see in the dashboard we have this is the monthly all the way down to the 30-minute chart. It's giving us an incredible insight into what's moving and what isn't moving and on which time frames. And this one is giving us kind of razor sharp focus on the given time frame. So if we have a look here for a second, so we are on the Australian dollar, the American dollar, and this is a 1 hour chart, which is this one here. The Australian dollar is weak and the American dollar is also pretty weak. So they should be, you see it's kind of verging towards the middle. As a matter of fact, before I do anything, let's have a look, see what the settings are for this. Look back is 3. So if we put this on something higher like 21, for example. So the Aussie and the American, so the American is a bit stronger. So this should be moving lower. Yeah, I mean, this gives a pretty good indication of that, where we have this pair moving lower. But again, very focused on the time frame that we're currently looking at. Okay, has anyone been using it and or maybe stopped using it? And it certainly adds something additional to the chart that we have to focus on, which brings our attention away from price, which is the most important bit. Yeah, I mean, I would use it. You can keep your eye on it, but I wouldn't make trading decisions based on this. I would always focus on price. Supply and demand is king, and this is just kind of showing us. I mean, it's a tool that helps us. Yeah, it's just a tool that's showing us, giving us a little bit of confirmation. So if you're the type that needs confirmation before you get into trades, then it's a tool that will shine. It'll really shine. If you're not, then you're just like to get in, like me. I don't really look for confirmation. Then you'll just trade supply and demand, and kind of let this run background, and use it to manage trades, which is also something I use it for. And I normally do this where, for example, if I get into a trade, maybe here, I'll hold the trade typically until I read opposing supply and demand. Typically, you'll see that the price reaches an area of opposing, let's assume that it's supply. Let's go like this so we can't see anything else. So let's find some opposing supply here so we have an example to work with. So, okay, we have, so we have that. It's all the way over there. Let's see what happens. We're getting close and closer. Almost there. Okay. So you can see here that we had that opposing area of supply here. And so I would be mindful of the fact that we had daily supply here. And so I would think, okay, I might want to be a little bit careful once price gets up to there. But you can see here that the momentum is building, and the Australian dollar is continuing to attract flows and the American dollar is losing flows. And so that would make me feel more comfortable holding the trade a little bit longer. And when this started to happen, I might have perhaps got a little bit uneasy, maybe move my stop to break even. But then we got this this news that came out and pushed price higher. Then of course that would enable me to hold the position longer. When you can see the price starts to drift lower like this, well, then it's just like a very clear signal that things are starting to slow down a little bit. And then price starts to drift sideways for, yeah, well, it's been drifting sideways since the middle of July, which you can see here how price kind of moved down. Now it's kind of like just moving in and around the zero line here. Okay, Sandy is saying confirmation to validate turning points. Yes, okay, good, super. Pete, you're having some sound issues. Is anyone else experiencing issues with the sound? Good. Yeah, I don't have a number to call in, unfortunately, but next time I will. I'll make sure that there is one. Okay, everyone says that sound is all right. There'll be a recording on this, so you'll certainly be able to grab the recording if it gets so bad that you can't hear anything. Good. My pleasure. My pleasure. Okay, good. So yeah, so that's pretty much it for the histogram. So it's a pretty cool tool. I use it, but I use it more for management than I do for anything else. And of course, validation and divergence that we discussed earlier on. Are there any other issues that people are having with the software? Are you guys finding it useful? Are there things about it that are better than others, or things that I can improve? Or is it still pretty new that you guys are kind of still getting used to it, maybe? Sandeep is asking if I would change the look back for the histogram for different time frames. You can do, and if you think about it, I mean, it would make sense to, let me remove this one, to change. For example, if you have 1 day, it might make sense to use 20 for that, because 20 days in a trading month, or for an hour, maybe 24 for 24 hours in a day. And I sometimes actually do that. If you have months, for example, maybe 12 months in a year. But I found that if you find like a value in the middle, then it works just fine. I try not to get too technical about the different values, because I find that it confuses more than anything else. And so it's definitely recommendable just to kind of keep it on a relatively simple or trivial value. Let me put this on here. Good. So if we have, sorry, I just wanted to get the current version of the histogram on that. Histogram. So if you put it on a small amount like 3, like a little value, or 5, then things are going to be very quick. As we'll just have a quick look at that, and you can see that like this is almost unusable. It's almost useless information, because it's showing you exactly what's going on in price. It's showing you these peaks and troughs in price just in strength, and so you can't really use this for anything. If you, of course, increase this, I just do increments, so like the Fibonacci number system, as you go like that, you can see it kind of smooths out a little bit. And the further you go up, the more you'll notice that things get nice and smooth. You can see things, okay, then you think, okay, so I mean, when price pulled back here, instead of price going below the zero line, it kept getting, it remained in positive territory, which means that you could have held it. And of course, the further up you go, the better, or the smoother rather. I wouldn't say better, I just say smoother. So if you go to, for example, 144, which is one of the bigger numbers, and you can see that, wow, this is telling a very different story. Here you can see actually that, I mean, yeah, we kind of a similar story to what we saw just a second ago, where we had price moving up, down, and then this big push kind of built up here, and you had this big mountain of strength that started to build up like so. If you want to get kind of gauge what's going on in a longer time frame, or over a longer period, then you can put it up to another level, another number like this, and it'll smooth things back even more, as you can see here. So it's still positive territory since, actually kind of since here. So if we go out here and have a look, you could see that we've been in positive territory since around here on the 1 hour chart, and that looks pretty, that supports pretty much what we can see here in price. And they're called like small pullbacks like that, but those are pretty insignificant. And so you can really see that, and if you put it on the bigger value, then you're going to be able to kind of sit on trades for a longer period of time. So you can see here, I mean, this is, I mean, you would have picked it up here. I mean, that was a tremendous, tremendous move there. Yeah, Brooks is saying he's still getting used to it. Definitely adjusting inputs a lot to see what works best for me. Yes, good. And I really encourage you to kind of change it to the small values and to the large values. I mean, just because I like the values to be a little bit higher doesn't mean that you can't use the small ones. Maybe you're kind of super kind of sharp and you have a very quick way of analyzing, and maybe this bleeding edge information is going to be very useful for you. Peter is saying, for refining entry points into supply and demand trades, do you think it would be best to use the smaller time frames or the histogram or both? I would use price, absolutely, and the histogram for confirmation. As a matter of fact, today I got a trade on, let me get my telephone, I don't even remember what it, oh, it was the Kiwi. It was the Kiwi. Where's the Kiwi? It's like a small trade, and I got it around here, kind of around here towards the bottom. If you go on the smaller time frames, you can see that there's a nice little release from here. So it looks kind of like this. Yeah, so price is kind of going in there, and the reason, I mean, I was watching this for a while, and then I didn't get into the trade. I waited, and I could see that, I mean, this was happening here, and I felt a little bit more comfortable. But this is like, I mean, it's not a beautiful trade. I mean, price didn't leave, and it left the area nicely, but it didn't. But it spent too much time in the area previously. You can see how price kind of really hung around in here. I don't like that so much. So price kind of hung around for a while, and then it finally cut up. And so we might have a small reaction here, and maybe a move up into this price imbalance, and maybe rebalance back up here before moving lower again. And I use the strength information. I was watching it on the very small time frame. I think it was even the 1 minute chart, just to see what was going to happen. And this helped me make a trading decision. Where was it? I think I had it on a longer, there's definitely a longer value. Yeah, I think, yeah, it's just around here. Also, I've noticed that, I mean, price will often turn around or consider turning around at extremes in the histogram, and you'll find these. I had these written down at some point where when if the look back was set to a specific value on a given time frame, a price would often veer away from off a given area of supply or demand. And so I was putting these values on, and sorry for jumping around like this. These things are getting removed. So I found that when you get to kind of extremes like this, and price will often have a bounce. And if these extreme readings are located at an area of supply or demand, then price will often maybe have a bit of a bounce. So you can see here we kind of touched up there at this area of supply, just here, this continuation pattern, tested once as a second test, but we kind of went up into that 154 area there. And the same happens to the downside here. On occasion, when it overlaps, there's nothing really here that's overlapping, because price is moving down here, so it's not like it's not really a nice pair to buy at the moment. But you can see here we had I mean, they're on the 1 minute chart, so this is only for illustrative purposes. But you see we have something up here. Maybe there's some supply there on maybe the 50-minute chart, Price came up there. We kind of get to that outer threshold, the upper band of strength, and then price often comes back. Sorry, to be a Danish word. So price is often bouncing between these levels here, and I encourage you to play with those because it's a very remarkable study to see what these values are and what lookbacks are required for you to be able to spot them. It's a very interesting study. Dean is asking, is there a difference between your supply and demand zones and the way Mike teaches us? I haven't actually seen the material that Mike has taught you. I would imagine they're probably pretty close to being the same. I mean, I've made an update to the supply and demand software this past week, and this version I'm currently testing now, and this is going to be released within the next probably couple of weeks. I'm still finishing it up, and it draws the levels a little bit different. I mean, they look like this on the new version, but the old version is a little bit different. And so the new version it's looking for pushes away from areas and how long it took for price to reach a certain distance away from an established area of supply and demand. And I've removed the significance setting, and I've introduced this risk-reward ratio and price imbalance release period. And it kind of sounds kind of a confusing term, but what that means is, well, the first one, risk-reward, you can see that this area of supply just here, this is, let's say this is 10 pips. And so I want price, once this has been established, or rather for this to be established, I want price to move away 3 times the size of the supply, so 30 pips within 5 bars. So once this is established, I want price to move away 30 pips within 5 bars. And if that happens, then this is valid. And so you can change, you can say, well, actually, I want the risk reward to be better, I want it to be 4, and I want it to move away in only 4 bars, which is, so we're really scrutinizing levels. So you'll notice that some of these are going to disappear now. And so here we have a good one, we have a nice one here, a great one here, and a great one here. So you can see that we have actually now refined our search for supply and demand areas, and we're really looking for the ones that are showing a great deal of strength. We had this one here, which is nice, test. We had this one here, test. This one's untested, as all of these are all fresh. This is fresh, fresh. This one's not fresh. Then we have this one down here, which is still fresh. And you can continue to make these levels more and more strong simply by modifying this value. So we say, okay, we want it to move away only in 3 candles. So that'll make some of them disappear. Nice one, nice one, nice one. This is okay, kind of a gap down, a little bit too much accumulation there, but this is nice how price gap down, rather moved away very quickly. I like this. And you can continue to manipulate those settings until you find something that you like. But I found that 3 and 5 seem to work just fine. So those are the ones that I normally use. And also, they include a lot more, but this enables you to perform the introduce the discretion of your own analysis to help remove unwanted areas of supply and demand. But this area is definitely much better than the one that were previously identified. And you can see here, I mean, this is the one that I took today. Just here, this is a half an hour. Matter of fact, we'll just chuck the histogram on there. We can even speed it up a little bit. Put it on 13. And you can see here again, we have a very good example of, it's going to turn off these lines. Okay, so we have another example of, we have price moving lower, the histogram it's not telling the same story. And where is this happening? It's happening at demand here, which you can see, which is this here. It's kind of like a kind of a funny old area we have. If you go to the smaller time frames, you'll find a few continuation patterns in here, but it's a nice release, and this is definitely the first time back, so it was worth having a look at. So you can see here that we have, this is like a really good example of exactly what we just discussed a second ago with divergence. Prices approaching this area of demand. Is it going to hold? We don't know. What's the strength information telling us? Well, it's telling us that we're going to get a bounce of some kind. And the good thing about this is we have this area of demand here, and we can ask ourselves the question, is price balanced or imbalanced? Which is actually imbalanced. And for price to return to parity and rebalance, it has to come back to here. And looking above price, we have this one as well too. So we have this one here, which is our first return to parity, and then we have another one up here. And this one has been pretty much rebalanced because price came pretty close to this one up here. But we'll have to see how this area of demand fares. It's not looking very convincing. Ideally, you want to see a poke down into a demand and then an immediate rejection, which we're not having now. So, yeah. But I'm just a really good example of that there, I think. Yeah. And so the new version will be coming out here probably the next, as I said, couple of weeks, and I think you'll really like that. I'm just trying to refine it a little bit, trying to optimize a few settings. But it's doing a lot of stuff like this. In areas like this, it's finding them very quickly. And so I've just been going through and looking for kind of optimal parameters. And so we have accumulation 1, 2, 3. This is 3 bars of 1, 2, 3. And how far did it go? It went almost 100 pips. So this must be about 30, not 25. So if we change a setting here, so okay, risk reward ratio, we want that to be 3, want to be within 3 bars, and that one should still hang around. And it did, as the only one, as a matter of fact. So yeah, in this region of price at least. So this is like a really nice example of that, which is what you want to see. You want to see a really strong push. You want price to hold away from the area for a while, and then have like a nice inefficient move down into the area of demand, which will then require rebalancing. So price will have to return to at least here to rebalance, which gives us the opportunity to return, to remove our risk from the trade. And so this is just this is like a really nice example here. Good, super. All right, what else is there? Okay, Sandy was saying some of the guys in Chicago needed clarification if the product key was needed for histogram and strength utility indicator or only for supply and demand. The product key is, I made it so that for all of the Pipnotic indicators, you only have to enter the correct value in one of them. So if you have 12 charts open and some are running the dashboard, some are running the histogram, and they're all running the supply and demand, you can take the product key and you can put it into either one instance of this dashboard, one instance of the histogram, or one instance of the supply and demand, and it'll update all of the other instances of all the other software. And this is because in the old days I had to do this manually, and you'd have to go into each instance and do it. And if you had, 30 charts open, you'd spend your whole morning doing that, and so it wasn't very clever way to do it. So I changed that. So you only have to put it in one instance of any of the indicators, and all the others will start working immediately. And my pleasure, Sandy. But what other questions you guys have about the software or some trading? Are you guys, how's the motivation? You guys still keen? Is the project still moving forward nicely? Just a point on that. I want to say that trading is really, it's not easy. It's very simple if you have the right tools and the right methods, but it's difficult, and the difficult bit is related to the person that's sitting behind the controls. It's really difficult to implement something that even though you know it works and you've seen other people use the exact same tools and methods with great success. It doesn't mean that we can do it ourselves, and so it just requires chart time, and it just takes a lot of time. It takes a lot of time. But the more time you spend, the closer you're getting to your goal of trading for the fund. And so I really encourage you to stick at it. And sometimes if you're really frustrated, just have a break. Like take a day off or a couple of days off and go and go for a walk or breathe some air or do something else. Do something completely different and try and change like how you feel about what you're doing. If you've had like a kind of a streak of losses, or you've had kind of a period where you weren't feeling very well emotionally, try and change where you're sitting. If you can move your computer to somewhere else, just you get like a little bit of a kind of a fresh environment that you can kind of view the charts, and then you're trading fresh. I think that would really help. I've done that a couple of times, where I had an office behind me, which is now we're in the process of making it into my son's bedroom. But I used to sit in there, and I quit my job, and I was sitting in there in this little dark room trying to earn money, and it didn't go very well, of course, for obvious reasons. And so I had, every time I walked into the office to work, I had everything in the office reminding me of how bad I felt, and it was a really bad place to be. So changed offices. Now I'm looking out of a different window. Everything is different, and now things are going well, and they've been going well for a long time now. And I mean, that small change helps. And sometimes I had, when I was programming the software, I was having some problems doing some algorithms, and I was stuck. And so I moved my monitor from one side of my desk to the other. So it was on the left side of my desk, and now it's on the right side. And so the simple act of looking to the right instead of the left has helped me kind of overcome that emotional hiccup that I had that was maybe causing some kind of a psychological block. So if you're having any kind of emotional turmoil or like negative emotion in your body, try and change it by sitting somewhere else, or changing the background on your computer screen, for example, your desktop picture, change that, anything, something like that. Play some music that you don't normally, or listen to music you don't normally listen to, just to kind of change your state so that you're not reminded of a less than optimal period of time. Okay, Dean Wade is asking, if a candle just fell short of a supply and demand zone, then it started to turn around, would you click into a trade with the market order even though it never actually touched the zone itself? I did that today on a trade because I wanted to get in. I knew where I wanted to buy, but price didn't quite get down there, and I saw that price was reacting very strongly to the area of demand, and so I could see that. I mean, it missed my entry by, a fraction of a pip, and so price went up. I think it went 2 pips above my entry, and then I could see on the 1 minute chart I was looking, and I could see that price was in a hurry to leave, and so I clicked in. So I canceled the order I had to buy, the limit order, and I just clicked in. But I won't do it unless I can get basically the same price. If I can get within 1 or 2 pips, but if price goes 10 pips away, then I won't do it. Then I say, oh, that sucked, and I just walk. Just leave it, because you can't. Then you're chasing trades. You have to be a little bit careful with that. Okay, Brooks is saying the currency strength utility, the text version. I missed that. Can you run through it for a minute? Yes, of course, absolutely. So this is the dashboard that I call it the dashboard. We have the Pipnotic currency strength utility, TXT. The reason it's TXT is because I had I had the histogram, which is the other one. Don't know where it's gone. And then I had the GFX, the graphics version, which is a squiggly lines, which I've kind of discontinued because I felt that they confused people more than anything else. So I introduced this as a replacement. And this is simply a way to show you a lot of information in limited space. And so this indicator is showing you strength information on the monthly chart all the way down to the 30-minute chart based on the configuration that we have put it in. So now it is currently in position trading mode, and we can change this simply by modifying the mode here. So you can choose position, swing, day, or scalp. So if we put it on scalp trading, for example, and press OK, and it'll come now. It's just downloading a bunch of historical data. There we are. Now you can see that we have 1 minute information up to, I think it's the 4-hour chart. Yeah, so the 4-hour chart. So this is more kind of bleeding edge strength information. And you can see that we have the Kiwi is down all day, and the dollar was the dollar had a rally last week because of some fundamental news, and now you can see that the Kiwi is looking to pull back or take back what it gave this last week here. And so this is really nice for kind of bleeding edge information. So when we're on the scalp, in the scalp mode, this enables you to focus on what's going on here and now, starting with the 1 minute chart. So you can look at your trend. You can see, okay, what should I be selling? Well, I should be selling the Kiwi. And what should I be buying? I should be buying the American dollar. So if we grab that chart, we put that on here, you can see here that we want to be selling this pair. We know that. And so you can see here we're having a pullback. You can see that the Kiwi is picking up and the American dollar is selling off. And you can see that here price is starting to pick up. So we go to the 1 minute chart, which this column represents. You can always see which column of strength is represented by the time frame that you're on because it's coloring them white. So if we go to the 30 minute, it's this one here. And so the 50 minute will be this one, and so on and so forth. So we go to the 1 minute chart, which is this one, and you can see it just here. And so you can see here that we have the Kiwi picking up, and we have the American dollar, which is in 5th place. So we have the Kiwi, which is the second strongest, the American dollar, which is the 5th strongest, for the look back of 20 on the 1 minute chart. And you can see something similar here. We have the weak dollar also on the 5 minute and the 50 minute, and the strong Kiwi all along the bottom here. And this is represented very clearly in price here, how price is kind of wriggling high here off the lows just there. And so you have to kind of identify the way that you trade and set it accordingly. Okay, Bentley is saying, is the difference between those settings, position, swing, day, and scalp, just the different time frames that the indicator is showing? That's exactly the only difference. So it's just showing you the difference. So it's actually sliding. It's just kind of sliding the time frames further to the left as you increase the trend. And Brooks is saying, what are your inputs? Well, my inputs here, I leave them, they're completely standard inputs. So I don't fiddle with it too much. I put it on position trading, and I don't even know if it's on 34. Must be. It's just a standard one here. Actually, I think this is a little bit lower. I think it's on 21 normally. Let's put it like this, like that. Yeah, which gives us a very good picture of the Kiwi and the American dollar and the euro. The euro is racing north, as we've seen. So that's what it looks like there. And sometimes if I'm doing some intraday stuff, then I'll move it down to like the day, because I think that gives us a lot of information. Then we have the day information here, and all the way down to the 5 minute here, which is perfect, which is just right. So I'm just reading inputs. Your dashboard is all green. Awesome, thanks. Okay, you guys need to add. Do you mean to the? Are you talking about the prefix postfix thingy here? Yes. Okay, super. That's right. So if you in your symbols list just here, of course I can't select it now. I mean, some of these symbols are going to look a little bit different. Some brokers like to append some characters before the symbol name and sometimes after. And I understand from reading the comments here that you guys have hyphens. So would you add the hyphen here as a postfix, Bentley? Yeah, at the end. Okay, you're saying super. So if you go like that, so you guys are going to have your configuration is going to look like that with a hyphen just at the end, the symbol postfix. I see. Sandeep is asking, is there any benchmark number of trades you might recommend for us to trade this strategy effectively? What would you say is too many? Mike, as an example, recommends no more than 10 trades a month to achieve high success with supply and demand strategy. Of course, it depends on the time frames that you're running on. I tend to trade longer term, so sometimes I only get like maybe one or a few trades a month. But if I'm doing shorter term stuff, then I'm trading every day. So it really depends on your trading style. Some people like to trade frequently. They like to be kind of interacting more aggressively with the market. I'm not necessarily of that makeup, so I like to go to the larger time frames. I spend most of my time on the hour and up to the monthly, and I feel pretty comfortable there. But recently, actually, I've been looking at the smaller time frames as I've been developing this new version of the software. Yes, but yeah, but I think, I mean, if you're referring to a sample size, I think a sample size of about 50 trades will give you a really good insight as to how you're doing, because as Mike has said here, I mean, 10 trades a month, I mean, that's 5 months of trading. Then you are going to expose the strategy and yourself to varying types of markets, which is what you really want when you're assessing a strategy and your ability to implement a strategy. So I'd say that's pretty good what he's saying there. Excellent. What other questions you guys have about the software or the trading, the method, the strategy? If anyone here is kind of sitting there like feeling a little bit discouraged, don't give up. You really shouldn't give up. If this is something that you want and you really, really want it, then really keep pushing forward. It will make sense. It will. Some people use an awful lot of time and figuring it out. I know a guy that spent 10 years figuring this stuff out, and now he's doing really, really well. I know a guy that came in, he knew nothing about it, and after 2 years, he was doing really, really well. Mind you, he never had any training. You guys have an incredible, you're very fortunate because you have a very formalized, structured education. And so Mike has created this constellation that enables him to bring in traders and run them through educational workshop over the course of, I think it's 3 months, isn't it? And then I mean, it's a dream. It's an absolute dream. I never had any of that. I had to sit and grunt and stare at charts all by myself. And so it just takes longer. It takes a lot longer. When you have someone who's been exposed to a lot of the pitfalls and can tell you which routes to avoid and which ones to go down, and then you're cutting corners you're cutting corners and you're shaving potentially years off your education, which is really, really good. Ideally, you have to find the area, so the candle that left the area very quickly. We have that here, a very beautiful example. You have accumulation. Is these candles related? Well, you can figure this out by asking the question, is the body of this candle within the range of the previous? Yes, it is. Is the body of this candle the range of the previous? Yes, and then no. And so you can see that the area of supply here would actually be from the bottom of this candle to the high here. So like that. But in the update here that I'm releasing, it's going to get you in at the most conservative price. And so you have to give back, or rather get in a few pips lower here. And for this one here, we had the candle that left very quickly. And so for this one, you draw it from here, bottom of this candle to the high of the high, which is up here. And this one, the body of this candle is not within the range of this candle, which tells us that there's a continuation pattern between these two candles. So when this one, it goes down, it closes, and it goes, this one opens, it goes down, then it goes up again. And so there's a continuation pattern within this one here. So for this one, I would draw it probably like this, just to make sure that you would get filled, or like this to be a little bit more conservative, which is what the indicator's done. And down here we have the same thing where we had price left, accumulated, then it went away. We have the low, and here we have the side of the candle furthest away from the low, which is just here. So I mean, the indicator did that one perfectly. So the new version is doing this stuff really, really nicely. And so we shouldn't have to do this so much anymore. We have another one here, how price accumulated. It left. So we have the high of the area, the side of the body of the candle furthest away, which is just up here, and of course the opposite for demand as we have here. But price managed to go a little bit deeper on this one, went out to the accumulation to here, and this is where price bounced to the pit. Yeah, just like that. Eric is asking, so the new version helps eliminate the need for us to manually draw the levels. It'll certainly reduce the amount of drawing, but it's not perfect yet. But the new version, like version 2.0, which is going to be based on TradingView charts, that should be much closer to perfect than these versions. But this version here, the new one that's coming out, is really good. I'm just trying to kind of debug and resolve issues like this. I mean, it's going to tell you where to look, but it requires that you refine your entry a little bit. But if you look at this on a smaller time frame, it's probably going to get your entry in correctly anyway. So we can even try that. Go to the 1 hour chart. Let's remove this, or even the smaller time frame, the 30-minute chart. Yeah, and on the 30-minute chart, it found it pretty much on the money. On the first test, we had a nice rejection. On the second test, a little bit of a deeper push. And then this is where we had the release. And this is the example used for divergence here. Adina is saying this sounds like Mike has been teaching it. Okay, so this sounds like the same stuff that Mike has been covering with you guys. What are the questions? All right, okay, I get you, Dean. Just going through some of these questions here. Okay, Stephen, you said here, do you find this is an early or delayed indicator? So this is a long time ago. This is 39 minutes ago. So this was in reference to the histogram. I take it. It's difficult to say actually, because it's a representation of price, but it's not really focusing on price. It's focusing on the strength, which is kind of a collection of different prices. But I would certainly say that it's slightly lagging in contrast to supply and demand, which is absolutely positively leading. Our core Brahmana here is asking me to explain market flow. Absolutely, I'd love to. Market flow, it's a pretty simple concept, and it simply states that if you have, I'm going to remove all these indicators here to make this super clear. I'm going to add one indicator here. Mr. Bill Williams, thank you very much. Put that on there. And so market flow is simply an analysis of how price is swinging. And here you can see that we have a low here, and we have a high. Here we have a lower low and a lower high. And so market flow for this price structure is down. You can see the most, okay, assuming that this candle was still open, at the point that price moved below the most recent swing low, which would have been this one here, when it moved through that, then this just confirms that we have a market flow, which is moving down. At the point that the most recent previous swing high is taken out, which price is having a go at now, when this happens, well then market flow has changed to be up. But the indicator is looking at this, and it doesn't like when price moves above a previous swing high, when the two previous swing lows are down, because this is kind of a confusing situation. Then you have more of kind of a megaphone formation where you have, for example, price going like that, like so. And this is, it's a little bit unclear. So the supply and demand software will show a small clock in the corner until it gets confirmation that price is indeed moving higher. And it'll get that once we get a swing low that is higher than this one here. But until that happens, we're going to see a clock in the dashboard, wherever you decide to put it. So that's market flow. It's pretty simple, and it's simply the study of swing points in relation to one another. Let's see if there are any more questions I've missed. Does anyone else have any additional questions about the software or trading in general? Okay, Aaron is saying here, can we automate the strategy, and if we can backtest the strategy using historical data to develop a reference distribution of profit and loss? Yeah, well, I've tried. As a matter of fact, I did automate. I didn't automate the supply and demand. I automated the currency strength. Let me show you that very quickly. And I automated. I just show you, and I automated the process here, trading supply and demand, and it was performing analysis of all of these currencies and the pairs that they compose, and it was buying or selling based on currency strength readings over multiple times. So it was that's a long time ago I've looked at this. Okay, so it's looking at this, yeah, like the slope of these currency strength lines and the rate of change and the strength, and it was using this to identify buy and sell signals. But I couldn't use MT4 to backtest it because MT4 only supports single instrument transactions. You can only choose one at a time. You can only and it trades 28 different currency pairs. The robot that I made, so it wasn't very useful. But this one was focusing on supply and demand. Sorry, on currency strength and not supply and demand, as you can see here. And so, but trading supply and currency strength alone seemed to be a pretty profitable route, a way to trade. I had the robot running for a course of about 1.5 years, and it was doing about 10% a year. But there was a fair deal of manual intervention. I was kind of sometimes scaling out of trades or closing trades out early that it had opened, which I didn't feel were the right trades to be in. And so there's a fair deal of interaction, and that was fine. But it wasn't a fully automated process, and so I went away from that. But I'm certainly up for implementing a supply and demand robot, and it's definitely something that's in the books. I'm just trying to get the new version of the supply and demand software finished so that I can kind of get that done and pushed out, and then focus on get my attention back to the automation, because like you said, it's a really good way to test it, and it's completely objective. You set your risk reward parameters and all of the other settings. You set it and you go, and then you can run different iterations of the algorithm, and you can manipulate the parameters. So you can run the robot over the course of, for example, 6 months or 5 years or whatever, and it'll tell you which combinations of parameters work best over that period of time. So it's definitely a very interesting study, and certainly one I'll dive into when I get some time. Urton is asking, do you use consuming opposite supply and demand zones to define trend? Actually, I use it to qualify supply and demand, but I don't use it to define trend. For defining trend, I like to look at these swing points. I'm going to remove everything again just to make it very clear. What I like to see is I like to see, what I really like is when these candles move away like this. This shows us that there's incredible strength involved. So what I want to see is I want to see, for a turning point for price to move low, I want to see a swing high, which we have here. So we have a high, and this one is higher than this one and this one. Then I want to see the candle immediately after move down further than the two previous candles, so this one and this one, which it did. So this tells me that this could actually be a point on a trend line, and we'll find the other one in just a second. And then we have the other one here where we have a swing high here. We have the following candle, and the low of this candle is lower than the 1, 2, 3, 4 previous candles. So this is a swing high point here. So you can go like that. Oops, sorry. So you can go like that. We'll just kind of run it over so it grabs the edge of these candles here. So that's how I like to do it. I like to find swing highs and swing points, and that's my definition of a swing high here. And for a swing low, which would be kind of show us where we have like a bottom, a trough, or somewhere we could attach a trend line to. I'll look for something similar here where we have, let me find one. So there's nothing there. See, if this candle here would have moved like this candle here, then this would have been a swing low here, but it didn't. Let's find another one. See this one here. Here we have one. We have a low, a swing low. The following candle moved higher than the two previous candles here. So this is a swing low here, and this isn't here, and we have nothing here. So I mean, there's nothing to attach this to, and so this is not a bottom, and as expected, price cut through it. We have this one here actually. This is a high, and this candle here moved below the low of the previous candle and below the previous candle plus one, which is this one here. And so this is a swing high here. And the other one we have is, where do we have one? We don't really have one anywhere, but I mean they're a little bit difficult to attach trend lines to, but they show you the trend very, very clearly. And so that's pretty much how I like to do that. You can also do this, where you look at market flow like that, which some people find useful. But I like to look at kind of more profound swing points than that. These aren't important swing points, and so I mean, this is not qualified. This is we have highs, 2 to the left and 2 to the right. They're lower than this one, but that doesn't make this important, and so there shouldn't even be anything there. This is not important either. This one is more important because it was a high, and the candle directly afterwards managed to move below these two preceding candles. So that was a good one there. This one, just shouldn't have one because it didn't really do anything. So actually, out of all of these, we'd only have this one here. And so that's what I look at there. I think that's a really good way for me to gauge direction. Then I look for, I want to see, let me see if I can draw pen. So I want to see, for example, a low. I want to see a candle do that. So this one moves above this, moved above. I want to see one here, and I want to see another one here. Now when that happens, I've got like the low, and this one moves above both of them. Well, then I have an uptrend, and then I can start buying. It's pretty late in the curve, of course, and I mean this is longer term trends, and you can look at this on, for example, the bigger time frames all over here actually. But if you want to just focus on immediate term trends, well, then you can just look at the imbalances in supply and demand. And this is a really good way to do that, where when price moves away like that, well, then we have a micro downtrend, because price moved away like this on the half an hour, and on, for example, I say micro because on the smaller time frames, the time frames below what we're currently looking at, then we definitely have a downtrend from there. So we can see here, yeah, you can see that price is definitely in a downtrend since that release. And on the smaller time frames, you'll see this becomes very, very clear. Price just cuts away very aggressively since then. And so that's how I like to look at trend. You can also look at trend lines, as we mentioned earlier. And the best way to use trend lines for a trend is to do it like this, is to look for a major swing lows. So you can have a bunch of price moving like that, then it moves up, then it moves down, then it moves up. So you have the first point of the trend line, the second point, and you have a high for an upward sloping trend line. And you can use this point as a trend line point because it moved above this high. Then you connect the trend line like that. And the same for a bearish trend line, where you have price moves up, we move down, we move up again, and we move down. This is the first one, second one. Oops, very bit ugly there. Here we have the low. So we go like that. This is a really solid way to draw trend lines, engage the trend. And I recommend you, if you're uncertain, then you should really use this, because it's a very good way to do it. And some people don't wait for price to move below this, but I think that's a risky game, because there's demand in here, and when price moves through it, then this is gone. And so price will have an easier time moving lower. If price is still up here, maybe price is going to react on this, and then instead it's going to move higher like that. And so you have to wait for the confirmation, I believe, to qualify the use of 0.2 in the trend line here. Okay, Eric is asking, do you look at classic chart patterns in relation to supply and demand zones to qualify trades? For example, there are a lot of bull-bear flags in relation to price inefficiencies. Yeah, I like to look for engulfing patterns, simply because they give you like a really clear picture that something's going on here. I like those, but I'm not a chart pattern guru at all, so I don't even know what half of them are called. So I just look for the ones that make sense, and this makes sense, and this makes sense. And so there are, and this makes sense here. And so these are definitely the ones that I'm gonna look for. But you can, if you're a master at kind of candlestick patterns and stuff like that, then I think you can incorporate that into trading supply and demand, and refine your technique to a very high degree, because I think that candlestick patterns can be quite useful. The only thing I don't like about candlestick patterns is that, I mean, on my chart, I might have like a doji, but on someone else's chart, it might be a big candle, simply because the GMT offset of my broker is different. And so while I see a doji, another person sees a candle like that, and it's a bit like, well, who's right and who's wrong? And so that's the main issue I have with candlestick patterns, is that we're all looking at different stuff, different price feeds, different candlestick patterns, which makes this very difficult to employ. But I mean, stuff like, you know, really nice rejections, so like what are they called, like shooting stars or hammers, whatever they're called, like into an area of supply. That'll be a really nice confirmation that price will potentially move lower. If we have, of course, we have supply at the top there, and price kind of wriggles up there. We get nice rejection, and then price moves away. So in that sense, I do, but I'm not really very good at chart patterns like double tops and double bottoms, or head and shoulders and stuff like that. So, I mean, head and shoulders and stuff, it's just pretty much Gartley patterns, and I studied Gartley patterns pretty intently in the past, but I don't use it at all today. I just do pure supply and demand. Excuse me. Any more questions? How's the weather in in Chicago and Detroit? Is it still blazing hot there? I was in the U.S. here just a couple of weeks ago for a month in the U.S. and Canada, and it was really hot. I was in Montana for about 12 days, 13 days. I couldn't believe it. It was incredibly hot. Then we went up to the mountains, and it got down to, I think, 42 degrees at night. It was amazing. Now, okay, 75 in Chicago. That's all right. That's certainly manageable. Good, good. Excellent. Cool. What other questions you guys have? Global cooling in Tennessee. Good stuff. Have we kind of covered the material for today, or does anyone else have else you want to discuss? Hey, Brooks, it's an absolute pleasure. I really enjoyed doing these. I'll add this video to the list. We have a playlist. Let me show that quickly. We have this. Oh, let me remove all those things there. We have a playlist. We have all of these videos. And have you guys seen this? You haven't seen it. All right, let me get the playlist here. Oops, and then I'll post it in here. All right, that's okay, here it is. Okay, let me know if this works. This contains all of the videos that we've done, and they're all about the shortest one is 21 minutes, and the longest one is almost 2 hours. Just click on that and just let me know if you get the playlist up. More is good, yeah. You should be able to see that. It's just, yeah, it's public. Excellent, super. And here we go through, all of the indicators. We go through price imbalances, currency strength, in great detail, great detail. And we've done this for a lot of the other guys. How many guys do you have at a Black Diamond FX if you combine all of the offices, roughly? I think we probably had yeah, that's okay. That's perfect. I think we've had, I'd say, around 50 through, and some of them 50 or 60. Yeah, maybe around 50 because some of them came to the webinars multiple times. 120. Wow, that's a lot. We haven't had that many in, but we've had I'd say maybe 50-ish or so. So they're definitely there's definitely a lot of really good material in it. I think you would get a lot of value out of. Rakesh is asking, would you mind doing a video where you are doing 3 to 5 pairs with a top-down analysis like you would start in a day? Yes, of course. I'd love to do that. I can do that maybe in the coming days, and I can add it to this playlist. So would that work out for you, Rakesh? Excellent. That'd be my pleasure. And I'll do that, yes. And maybe I'll do that now and again. I kind of chuck a video up in there, and then you guys can kind of follow along like that, or you can see what I like to do. But what I do is not right. It's just how I do it. You might look at what I do and say oh, that's a bunch of rubbish. So you should really don't try to copy me. Just try to take the bits and pieces that I say that make sense to you and are useful, and use them and make them your own. Because I think that you'll get much more value out of it if you just take the information and kind of chew on it and then use it in a way that makes more sense to you. Exactly, Rakesh. Yeah, he's just saying, thanks sounds perfect. Not to copy, but to learn and use my own style. Exactly. My mentor, my first trading mentor, actually I've only had one, but this guy, he always used to, he would never, ever show me where to enter a trade. I used to ask him, I said, okay, where do I enter? Where do I get in? And he never showed me where to trade. I asked him, why on earth aren't you showing me like where I should be trading? He's like, you should be figuring this stuff out by yourself. He said, I'm going to show you the method. I'll lead you to water, but you have to drink yourself. I mean, it just makes perfect sense, you know. You have to. Ultimately we should, if we're trading on the hourly chart, we should all be identifying the same level or levels in the vicinity of the level that we want to trade. Good stuff. We've been rambling on here for quite some time. I don't want to keep any of you longer than necessary. If you guys don't have any more questions, I think we can wrap things up, and then we can I can get this video done, and then we can kind of move forward and maybe plan another webinar in some time down the road, and kind of follow up again if there's anything you guys still missing. But I think once you see these videos here in this playlist, you'll really see a lot of stuff that that might be very useful. Also, because all the indicators are documented in great detail there, the trading strategies, absolutely everything. So I think that'll be quite helpful. Yes, of course, you can drop me an email and let me put it in here. There you are. And I'll normally respond to you within a very limited amount of time. Oh, cool. Hey, thanks, Stephen. Thanks so much for being here. Thanks, Carl and Brahman. Cool. Well, I'll wrap up. I'm going to stop the recording button. Excellent. Yeah, thanks. I'm gonna hit the hay. It's about 10 minutes past midnight here, so I can snuggle up next to my wife and get some good sleep before the morning. But you guys take care. Good night. All right, you guys take care. Thanks so much for being here.